Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, across the board here, we had another positive day on the equities. We had the Dow, S&Ps positive, but here's the big deal. Nasdaq posting a new all-time closing high here up to the 54.83, so just a stone's throw away from the 5,500 whole number. Again, those are all kind of like century marks. You know, the Dow 20,000, S&P 2,300, Nasdaq 5,500s. Those are all of these century marks or $100 increments of these indices that I think will be an important test to see if we can stick them and hold them throughout the rest of the year. We had the crude trading up into the 53.50s, gold and bonds catching a little bit of a bounce after a sell-off here after the Fed rate announcement. So we'll take a look at all of this on the charts. But as always, folks, we're going to start off with the S&P 500s on the dailies. So folks, what I've been mentioning here is that, you know, we had a little bit of like almost like a high handle building upon this breakout that we had right above the 2215s. That's the 2215s on the S&P 500. We even talked about here, so here's like this little bit of like a high handle, right? And we kind of said that, you know, looking at this high handle here, it's almost kind of looking like a pennant. It's a little bit clearer to see on a intraday chart. So you can see that pennant here forming on the S&Ps, and we're basically looking for a break above some of these descending trend lines or a break below this ascending trend line. That's kind of how the pennants work. And folks, it looks like the market's tried to break higher. So at this point, what I'm going to be looking for on Tuesday's trade is basically looking at a break above this. That'll be confirmation. On Monday, we gapped up here, and we just basically traded sideways the entire day. You can see that right here on the charts. So to me, as we come into the Tuesday trade, what I'm going to be looking for is a trade up and over the 2273s and having a nice extension, a nice little leg built upon that. And then, you know, what I'm looking for on the downside too, in case we do end up going down overnight, you know, 2250s, that's the first area of support. And then ultimately 2215s, the 2215s, that's going to be where I'm watching here in case, you know, over the next day or two you start to, you know, find yourself below these areas. These are the two support levels that I think should hold on the S&Ps going forward. Now, the big news here is the Nasdaq did post up into new all-time closing highs here, up into the 54.83s, and we've been mentioning how the Nasdaq has had a little bit of relative weakness, has had some issues with that. However, one of the things that we also did mention is some of the likes of like a Microsoft, the Alphabet, and Netflix have been looking better over the past 2 weeks or so, and that has really helped to boost the Nasdaq up here. And in fact, similar to or analogous to the pennant that we saw in the S&Ps, we saw the Nasdaq forming a bit of a balance here, just a really tight range. Looking at that on a intraday chart, you can see here, here's the top end of that range, right? And so here we are knocking on that top end, looking like it's trying to break out. And there's the 5500s, just a stone's throw away. So that would be sort of my confirmation that the market is trying to move higher. It's trying to extend some of these gains, even going into the end of the year. All right, so as we take a look at some of our external markets here, the big one that I'm watching is the crude oil, and you know that staged somewhat of a breakout here up and over the 49.20s, kind of invalidating a bit of a topping pattern we were seeing about a month ago, and now kind of hanging out up and near these 54s. And we've been mentioning the crude for quite some time. You know, it looks like that a trade above the 52s, kind of this gray line here, somewhat looks like an inverted head and shoulders. It looks like this is trying to move higher. So the crude extended gains closing the current contract here up at the 53.50s. Taking a look at the bonds here, the bonds pulling right down into these prior levels of support here. Again, we've mentioned that looking back quite a few years here. If we take a look back at the 10 years on a weekly, you know, you can see that this is an area that the bonds have caught support back in like 2012 and 13, and that's exactly where we found a little bit of support here over the last couple of days post-Fed rate hike announcement, which pushed the bonds down. Obviously, remember, they move inverse, right? The yields and the bond prices. And then finally, taking a look at the gold here. So folks, the gold, you can kind of see what I'm looking at here. So gold getting rejected off of these 1300s, breaking down below the 1250s, then the 1200s couldn't hold. So at this point, I'm kind of looking at gold like maybe over the next couple of weeks or even months, it's very possible that we might see a test down at the 1050s. Normally after a very sustained sell-off like this, you would see some kind of like a bounce, like a short cover rally or a dead cat bounce, some people call it. We have not seen that in the gold yet, and that leads one to believe that there's really a lot of inventory that people are trying to get rid of. That's why any attempted rally is met with actual selling. It's not short selling, but maybe inventory that needs to be unloaded. So that's why we really haven't seen any sort of snapback rallies even after a big sell, basically down from 1330s all the way down to the 1130s, almost losing about, what is that, almost about 200 points there, right? So post-election, big sell-off in the gold, and really we're just looking for some semblance that maybe a bottom is in, but folks, 1050 is kind of that spot. I'm thinking maybe over the next several months, gold's going to tag. Now, even though we're heading into somewhat of a quiet holiday trade here, one thing that I thought was interesting, a trade we actually took today, was a stock ticker PI, and there's a couple of reasons I bring this out. One, it was a great trade. It was up almost 12% on the day. We were buyers first thing in the morning. But the reason I bring this up, more important than it worked out, it was a great swing trade, we still have it on our books, and we're working the trade, is that it actually was something that we had traded on Monday, and it didn't work out for us. So we bought it on Monday, we sold it on Monday, didn't work out for us. And I think that this brings into play a very important concept about trading, which is you're not going to be right all the time. That's just a fact about trading. And so if it looks like you may be wrong on a stock and you close it out to protect your capital, right? To save your capital to fight another day, so to speak. What you have to be willing to do is jump right back into a position if it meets all your criteria, if it has the chart pattern setup that you're still looking for. You can't be afraid to buy a stock just because you sold it a day or two ago. If it gives you another setup, you've got to be willing to go for it, because that's exactly what happened on Monday. We took this trade like right around the 35 80s. It just never went anywhere. It just kind of fizzled out, and you can tell here by the end of the day we were actually down on the position, just very marginally, right? But we closed it up because we were down on the position. It closed below the midpoint of the breakout, and basically it wasn't quite convincing that it was trying to break out. All right. Now, fast forward to Tuesday's action. The stock in the first 15 minutes starts to rip higher, okay, then forms a little bit of a handle, and we send out our trade alerts to our members that we're taking this trade right at the 3640s, and this thing just rips higher ever since then, and actually closed up at the day up over right at about the 40 evens. So this hit both of our profit targets on the day. It was a great trade. It was nice to get a little bit of, quote, vindication on the stock, but that's not why we trade, right? We never trade out of revenge for a stock. We just trade because the setup's there. And it's a very important point that even though sometimes a stock may kind of fool you or maybe give you a little bit of a head fake, if you close a position and the next day or two comes around and it looks like it was a mistake to actually close it out, you got to be willing to jump right back in there. So that's a very important point about this. Also, just an important point, hey, even though the markets get choppy here and maybe the trading gets a little bit tricky, don't disengage from the markets. You got to stay tuned in, and then definitely you'll be able to spot some of these opportunities as they come around. But folks, other than that, wishing everyone a great trading day ahead, and join us for our next market trend review. Take care, everyone. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.